So first I'm going to go over accumulation, and then I'm going to go over distribution. They're basically the same thing, just inverse. Accumulation is bullish, distribution is bearish. They have the same patterns to look for. The first thing you want to look for in an accumulation pattern is an impulse move down. So that's step one. So step one, you want to look for impulse move down. Okay. So we have an impulse move down here. This is your impulse move down. Now, the next thing we want to look for is a sideways inside bar, kind of a flagging pattern. So step two is going to be inside bar or flagging pattern. So here we have step one. The impulse move. Here we have the beginning of the flagging pattern of the inside bar pattern. Okay. Now, the third thing you want to look for, let me bring up volume here. This one isn't perfect, but we still see some good volume. The third thing you want to look for is a increase in volume, step three. Increase in volume during a up fractal. Okay. So we see an increase in volume here, right? It's not a very big increase. Where's my arrow? Here it is. It's not a very big increase, but we do see a small increase in volume here. It is above average. The blue line is the average line. So we see a small increase in volume here. We also see an up fractal. This is an up fractal. If you don't know what an up fractal is, it is when you have a low and then two higher lows on each side. So we have a low here, excuse me. Oh, sorry, I have to sneeze. We have a low here and two higher lows on each side. This is an up fractal. You can see we have an increase in volume during this up fractal. So that is confirming your accumulation. That is bullish. Okay? So this becomes the beginning of your accumulation zone. Let me get rid of this shading. This becomes the beginning of your accumulation zone. This up fractal that sees an increase in volume. Once it starts to push up and fails, we see a failure here on a resistance point. Failure, perfect failure. This is a support that was the last support before an impulse move down. You have an impulse move down here. You see all these candles are kind of slowly downtrending, and then you kind of have an inside bar section here, and then an impulse move down, right? This is the last support before an impulse move down. So that becomes resistance. So once this hits that resistance, if it fails, that becomes the high of your accumulation. So here we have the high of the accumulation. The next thing we're going to look for, let me zoom out a little bit. The next thing we're going to look for is a retest of the low of the accumulation, which we saw here. So step four, retest of accumulation low. Make this a little easier to see. So here we have the step 3. And now we have the step 4. We have the retest of the accumulation low, and it holds on good volume. So we see an increase in volume here. And we see another up fractal. This low here, we zoom in. This low here shows you, or excuse me, the low has 2 higher lows on the left, 2 higher lows on the right. So this creates another up fractal. So now that we have 2 up fractals on the accumulation low, you can start to buy this. You could have bought this second up fractal here. You would have targeted the accumulation high. Does this make sense? If I need to go over anything, feel free to just type in chat, let me know. So step 1, you want to see impulse move down. Step 2, you want to see inside bar or flagging pattern. On that inside bar or flagging pattern, you want to see an increase in volume with an up fractal. Then you want to see a retest of the accumulation low once the accumulation high has been made. So it could be like step 3.5, watch for accumulation high. Then step 4 is the retest of the accumulation low. So that is where you can buy. It's basically a double bottom. This is basically a double bottom pattern. Accumulation and distribution is taught many different ways. Typical accumulation patterns that you guys all know about are like double bottoms, triple bottoms, cup and handle, stuff like that. Those are typical accumulation patterns. What I'm going over is more of a flagging kind of a consolidation accumulation pattern. Something that you can look for not only in uptrends not only in downtrends, but also in long periods of consolidation. It will give you kind of an edge on, yes, this is a sideways market, but which way is it leaning? Is it leaning bullish or is it leaning bearish? So if you see this type of structure in a downtrend and it starts to consolidate, this is leaning towards the bull side, because where are you seeing the increase in volume? That's what you want to be asking yourself when you're trading when you're trading anything. Where are you seeing the people participate? The people are participating when it hits the low. They're not really participating when it hits the high. So you can see here, when it creates this high, look at how low the volume gets. Like, yes, it looks bad on price. You have a big red candle here that kind of engulfs the previous candles, but look at the volume. Nobody really participated in that move down. People are participating in the lows more than they are the highs. So that is more bullish than bearish. More people are participating in the green candles than they are in the red candles. So this is an easy setup to look for when you see consolidation or when you see an impulse move down. So you want to see the impulse move down as step 1, inside bars, volume increasing with up fractals. You want to see a low being put in. So if, for example, this low, let me use magnet mode. This low was 1150. Okay, what is the next low? The next low is 1150, perfect double bottom. You can even consider that a low, 1150, triple bottom. Okay? Look at the volume on these fractals too. increase in volume on the lows. This one didn't have a really big increase in volume, but you can still see an increase. You see an increase from these red candles to the green candles. Same thing here. Increase in green candles. So that is your accumulation. Let me see if I can find one on Ethereum. Yeah, Ethereum's not bad here. Let me go to a daily. Yeah, Ethereum's pretty good here. Okay, so same thing. Impulse move down. Step 1. Impulse move down. Inside bars forming here. This becomes your range. Your first fractal is right here. That becomes your low. This becomes your accumulation low. Wherever it fails becomes your accumulation high. So right here it failed, pushed back down. That becomes your accumulation high. Then we see fractal here. Fractal here. Forming basically a double bottom. $80.60 is the bottom there. $80.70 is the bottom there. So basically a perfect double bottom. Also look at volume. Increase in volume on this fractal. Increase in volume on this fractal. Look at the divots in between the fractals. Low volume in between the fractals on the move down confirms the double bottom, confirms the buyers want to buy the double bottom. They are buying the move down. They're not scared. They're not fearful of it breaking that low. There's no panic selling going on. If there was a lot of panic selling going on, then there would be an increase in volume in the red candles. We don't see that. We see an increase in volume on the up fractals, the bullish candles. Shows you that the bulls are not scared. They're not afraid of a panic sell-off. What we saw here, which would have faked you out a little bit. Let me go up a little bit here. So you have your impulse move down here. You have an attempt to form an accumulation zone here. So here's your low, higher low, higher low, higher low, higher low. This becomes your up fractal. Wherever it fails, it failed here, pushed back down towards the bottom. This becomes your accumulation high. Let me get rid of this. So you have an accumulation low here, up fractal, increase in volume on the up fractal. You have your accumulation high here, failure, low volume in between. But then look what happens. You see when it comes in to test that accumulation low is 97.60. When it comes to test that accumulation low, what does it do? The volume increases on that red candle that breaks that accumulation low. That is the panic selling that I was talking about on this low. It showed you that buyers did not want to buy that low. People were selling that low. It broke the low. It's probably a lot easier to see on a lower time frame. Let me drop it down to a 12-hour. That would be right here, I believe. So on a 12-hour, we see here accumulation low by this fractal. accumulation high from this fractal. This is your up fractal. This is your down fractal. We have high volume on the up fractal, lower volume on the down fractal. All good signs of an accumulation low. But that third thing, that or step 3 or 4, when you want to see it retest that accumulation low, you want to see that next fractal being made. You want to see the volume come in on that fractal, on the up fractal. We don't see that. We see a break of that accumulation low. Sorry, my brain's a little scattered because I'm sick. I keep losing these tools. This is your low here. 97.60. When we retest that low here, you almost have a bounce. This might have faked you out a little bit. You almost had a bounce there on that doji. But then it failed on the next candle. This did not become an up fractal. What we need for an up fractal is what? We need a low and 2 higher lows. Some people say 1 on each side. So some people do 3 candle fractals. Low, higher, low, higher, low. This is the proper way to do it. 5 candles. It's a little slower, but that's the proper fractal. So this attempted to make that fractal to give you your buy signal, but it failed. Your accumulation low was broken on high volume, showing you a panic sell-off. This is a panic sell-off. You go from low volume on an accumulation to high volume on the break of the accumulation. That is a panic sell-off. That is fear. Okay? This is an improper accumulation low. This is a proper accumulation low. Up fractal, high volume, up fractal, high volume, in between on the move down, low volume. So your down fractal on the move down has low volume. This is the retest of the range low. This is your buying opportunity if it breaks out. So once this up fractal is broken, which it was broken here, you have the low, 1, 2, 1, 2, high of the fractal. Once the high of the fractal is broken, boom, right here. That's a buy signal, high volume. You also have another buy signal here on the break of the range high on high volume. So that is accumulation. I think I've gone over it enough. I think I've gone over it the same steps clearly for you guys to understand. Do you guys have any questions about accumulation before I go on to distribution? All right, so for distribution, your first step is going to be impulse move, same as before, but this is going to be an impulse move up. So here we have an impulse move up. We're going to use this as our first example. So here we have an impulse move up. Now, step 2, you're going to find your accumulation high. This isn't about Bitcoin trading. It's just a way to read accumulation distribution. You can use this on anything. I'm just using Bitcoin as an example. Okay, so here's your impulse move up. Once you start to have this inside bar pattern, that's when you look to form your accumulation high. So here we have the start of an accumulation high. We have an up fractal here. The high has to be higher than the 2 candles before it and the 2 candles after it. So we have this high here is higher than this candle and this candle and this candle and this candle. That becomes your accumulation high. And then where it begins to find buyers becomes your accumulation low. Or sorry, distribution low. Distribution high, distribution low. So this becomes your distribution high. You can see the volume came in, confirming that fractal. Here we have the low volume in between on the up fractal. So you can take either this fractal here or this one here. I'd probably take this one, but you can mark both of them. So both of these are up fractals because this one has a higher low on this side, 2 candles, and this side here, 2 candles. Same thing for this low here, 2 candles, 2 candles. You can see the decrease in volume in between the 2 fractals, and then you see the next down fractal, which tests the distribution high. I see that I put accumulation here. I'll fix that. This should be distribution. So here we have the test of the distribution high. It wicks above it a little bit. It gets above it by about 2%, but then it fails. Look at the volume to confirm. You have a slight increase in volume above relative on that double top. This gives you your sell signal. Once this high is formed, you have, let me grab the horizontal ray. Once you have that high formed there, low, 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 or excuse me, high, lower, high, lower, high, lower, high, lower, high, that forms that fractal. That's your sell signal. You have another sell signal when it breaks the distribution low. So here we have the break of the distribution low. Look at the volume. Same thing I said before, panic selling. You have that panic selling when it breaks that distribution low. Increase in volume on the first fractal down. Slight increase in volume on the second fractal down. Low volume in between. And then you have the increase in volume when it breaks the distribution low. Sorry, here. Step 3 would be high volume on down fractal. Step 4 would be low volume on up fractal in between the highs. And then if you wanted to add a step 5, this would be basically your final point would be the break of the distribution low. So you have that impulse move up. You form that flagging pattern with that down fractal. That creates your distribution high. Confirmed when you have an up fractal in between after that first down fractal. You also want to look for volume, confirmed on high volume on the down fractal, lower volume on the up fractal. Then you want to see a retest of that accumulation high. If it fails that accumulation high on high volume, that's your next confirmation. And then your final confirmation is when it fails that distribution low on high volume. Yeah, exactly, Ketoid, exactly. So, he said a good lesson in patience too. So many people striving to catch tops and bottoms. You can let this play out fully and still get a good entry. Exactly. Especially when you see people always assume after they see an impulse move that the next move is going to be another impulse move. They're like, oh my God, this thing's moving really fast. I need to get in it now or I'm going to miss out. They have that fear of missing out. But if you think about what happens in trading most of the time, once you have a big impulse move, you're not going to have another big impulse move back to back. You're not going to immediately see another impulse move. You know what I mean? So people FOMOing into this who thought they were going to see an instant failure, they weren't going to get it. You're not going to see. I mean, I say that, but Bitcoin's kind of a bad example because there's so many BART patterns where you see impulse, sideways impulse. But that's typically not what you see in standard trading. But if you like got in this really early, maybe like down here or something, and you expected an impulse move immediately, you're not going to get that. If you would have just waited to see that distribution pattern play out, you would have gotten a much better entry most of the time. Even if you got in down here, it still would be a better entry because more often than not, this is going to give you the higher probability of a down move than this or this. Because that is the final confirmation. That's like check, check, check. Everything's checking the boxes. Boom. Distribution low is broken. You see what I'm saying? So even the late people, the people who are really patient, they got in lower, but their entry's still better for the most part if you use that entry throughout your trading. Because if you entered here or you entered here, yes, if this does fail, you are getting a better entry. But the probability of these entries working is lower than this entry working. If that makes sense. So you might be getting a lower entry, but you have a higher probability on this than you do on this or this. And this one is a higher probability than this one. So that shows you the more patient you are, the higher probability you have of being right. The same goes for accumulation. And you really don't need all this fancy stuff to find this stuff. It's so easy to see on charts. Like you see an impulse move down here. Okay, what do? You look for a range. Okay, we have an up fractal try to form here, but then it fails. You have a low put in, but then this becomes an up fractal because you have a low, 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 low. So that becomes your low. Wherever it fails becomes your high. So there's your high, there's your low. Look for volume. Oops. Kind of low volume on the up fractal, not giving you too much confidence. Lower volume on the down fractal, so that's kind of good. But then you see an increase in volume on the failure. That's a panic sell. You have a panic sell there. You also have a retest of the accumulation low, and it failed. Okay. So then you just look for one that works. You look for another one. Impulse move down. Okay, so here, this originally was your impulse move down. That failed. Now here's your next impulse move down. So now you start to look for your range again. Here's your up fractal. Boom. You could have taken this one, but then it was broken. So now you take this one. That's your low. That's your high. You look for the retest of the low. It doesn't have to be perfect. I might have made it sound like that when I was teaching it, but it doesn't have to be perfect. This is still holding the low. It didn't perfectly test the low, but it's still holding. You have another up fractal here. You have another up fractal here. This candle, this is for this candle, this is for this candle. So then you see your break of the range on high volume. Look at the volume. You have so many signals here. You probably wouldn't have taken a trade here because the volume was so low. You probably wouldn't have taken a trade here because the volume was so low right here. Same thing with this one. You probably wouldn't have taken a trade here. So even though you had this accumulation, you probably would not have traded this because the volume was so low. You should have traded this because the volume is very high. People are participating in the break of that accumulation low, or excuse me, accumulation high. If people are participating in it and that candle is still that strong, that shows you they want this to go up. Same thing here. You have another distribution pattern. Impulse move up. Flagging pattern. Here's your fractal. That would be your low because that's where it bounced. This one actually isn't too good because your fractal has to have 2 candles on each side. This one only has 2 candles here, but then it instantly started bouncing. So this, you would not have sold this. That's another failure. So let's look at one that works. Impulse move up. Fractal. Fractal low. Attempt to retest. Failure. High volume. Panic sell-off. The same pattern. Repeated again and again and again. Accumulation, distribution. Very, very simple. Distribution high. Distribution low. Attempt to retest the high. Failure. Break of the low. High volume on the break of the low. Panic sell-off. Like I said, if you would have entered here, you would have had a good entry, but it would have been a little early. That's trying to predict tops. This is hindsight, obviously. This candle could have easily turned into this candle. And you could have saw a continuation of the move up. So everybody who entered there and it ended up failing, they kind of got lucky on that one. Well, I wouldn't say lucky because they could have been doing other trading techniques, but they predicted the top and they got it right. If you would have waited for confirmation like this failure here, which is a fractal, you have a down fractal there, down fractal here. Look at this up fractal in between. There's like no volume there. And then you see the break of the low. And once again, people who got in here had a much higher probability of making money than people who got in here. Even though these people probably made more money, you had a much higher probability of making money if you got in there. Where is the entry if you play the second fractal? You have to wait for the following two candles to close. I'm just now seeing that. So which example are you referring to? Are you referring to this example or the first example? The first example? Okay, this one. So let me draw it again so we're on the same page. Okay, so by second fractal, are you referring to this one here? This one that I just marked? Okay, so you said, where is the entry if you play the second fractal? Do you have to wait for the following two candles to close? Okay, so that's a good question. So here's your first fractal, right? That makes your distribution high. Your second fractal, it's not considered a fractal until those two candles close. So until you have that high, lower high, lower high, lower high, lower high, this is not considered a fractal until these close. Like I said earlier, some people use 3-candle fractals where it's high, lower high, lower high, low, higher low, higher low. I don't use that because typically they're not as accurate. So you could have used a 3-candle fractal here. So this would have been your high. You could have waited for this one to close. So once this candle closed here, that could have been your warning that that down fractal was forming. So you could have entered either on the close of this candle here, or you could have entered on the close of that candle there. This candle, once again, you're entering lower, but you have a higher probability. Because this has failed, this fractal has failed the high. Yes, it wicked above the high a little bit, but that's still a failure. That is not finding support on that high. For it to pass the breakout, it has to find support, or it has to be an impulse move. This is not an impulse move, and it's not finding support. So it is therefore failing the high. So you can either enter on the 3-candle fractal or the 5-candle fractal. Or you can be incredibly patient and wait for the break of the distribution low. Your entry would have been there. This one would have faked you out a little bit. You would have got a little scared because you would have entered here. You would have entered on the close of that low, the break of the low. But then look what it did. It bounced right back into the distribution. So that would have scared you a little bit. You should not have had a stop loss that tight though. Your stop loss should have been at least above the candle. Minimum above the candle. A really tight stop or really good stop loss would have been above the high. So like either there or up here. This would have been your highest probability trade is the break of the distribution low. But yes, you can trade the second fractal on the next candle. Or excuse me, on the first candle. It's just not as good, obviously. So if you would have did that, let's see if you would have got faked out on this one. Yeah, targets, same thing I always talk about targeting. Previous highs, previous lows, last supports, last resistances, stuff like that. So like for this one, you would have been targeting this flagging pattern here. You would have actually been targeting that high. You could have targeted the low. The high here. The low there. This is your last resistance before that impulse move. This is your last support before that impulse move. That's your last resistance before that bottom. That's your last support before the impulse move. Does that make sense? And then if you're trading below this, then you're trading as a breakout trader. So all this is breakout because you're below the last support. Then you would have been targeting previous supports. I see a lot more people are coming in. I've kind of already finished my explanation, but I can happily go over it again if you guys have any questions. I'm just going over how to read accumulation and distribution patterns using very simple flagging techniques. If you guys want to see this on like stocks or Forex or whatever, just shoot me a ticker and I'll take a look at it. You can do this on any time frame, but as always, the higher time frames are much better to do it on. So like you could do this on like a 5-minute. I didn't realize Bitcoin dropped here. We just had a big drop in Bitcoin. Is that what is? Okay, never mind. That was that candle. Yeah, I saw that. Okay, so here's a good example. We're currently seeing an accumulation pattern on the 5-minute, right? I wouldn't use this on a 5-minute, but just for example's sake, you can use this example here. You have an up fractal here, so this becomes your low. Wherever it fails and heads back down towards the up fractal is your high. So there is your low. There's your high. Now we're looking for a retest of the low or a break of the high. So I would like to see this head back down towards the bottom, find support with good buying volume, bounce up, and then break the high on good buying volume. That is a perfect accumulation pattern. That is what we look for. So I wouldn't trade it where it is. That's not a good trade if I'm using this technique, of course. I want to see either a test of the accumulation low or a break of the accumulation high. Both of which need to be done with high volume. Because it needs to show you that people are participating in these tests or breakouts. If people are not participating, if it's breaking out on low volume or it's testing on low volume, the chances of it succeeding are very low. Think of surveys. Think of like how companies do surveys. Would you rather have someone tell you they surveyed 10 people, or would you rather have somebody tell you they surveyed 1,000 people? The stronger survey is going to be with 1,000 people, right? So that's how you want to look at volume when you're trading. The higher the volume, the more people are participating in that event. The more people are participating in that candle, the more people are participating in that pattern. We could pull it up on like a 15-minute. So look at this range here. This is distribution. Why is it distribution? We see an impulse move up. This will probably look better on like an hourly. Let me pull it up on an hourly. So we see an impulse move up. If you guys don't know what I mean by impulse move, I mean like big moves, like breakouts, failures, clear definitive moves on a chart. Like that's an impulse move. This is an impulse move. This is consolidation. So just to clarify. So we see an impulse move up. Okay. Then we start to look for our distribution. Here's your first fractal. That becomes your high. This becomes your low. But then that fractal fails It breaks out and forms a new fractal. So now this becomes your high. This becomes your low. This one's not very pretty. Pretty bad example, but still same technique. Because this is what I was talking about at the beginning of the stream. BitMEX wicks are just so exaggerated. If these were like normal candles, normal wicks, this would be a lot easier. But whatever. So we see the accumulation or distribution high, distribution low. It attempts to move towards the distribution high, fails with this down fractal here. Why is that a down fractal? Because we see high, low, 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 low. It's high right here is higher than these two candles, higher than these two candles. That gives you your down fractal. This one probably would not have been traded unless you traded it here, because I probably would not have taken a short there. Because even though this is moving towards the distribution high, it's still towards the bottom. If we take like the 50%, the equilibrium, if we take like the equilibrium of this box, which is right here, I guess it's below the equilibrium, so that's not very good, but it's failing the equilibrium, so that is good for a short. I mean, you don't really want to short below the equilibrium of the distribution, because think about if this went on forever. Think about if this was like an extremely long consolidation. What do they tell you in standard trading? It's like buy the lows, sell the highs, right? So why would you want to sell the lows? And this is considered the lows. This is considered the highs. Above the equilibrium is highs, below the equilibrium is lows. So overall in trading, why would you want to sell the lows? That's not, unless you're a breakout trader, obviously. You don't want to sell the lows there. So you probably would not have taken that short. This you probably would have taken, because that's the break of the distribution low on high volume. You see panic selling. Does that make sense? That's another thing you can add to your accumulation distribution. You can use the equilibrium as well. Why not use the candle body for your box instead of the wicks? You can, but for the most part, it's not very good with this technique, because distribution and accumulation, the way that I'm teaching it, is at the top of trends and the bottom of trends. Typically at the top of trends and the bottom of trends, you see a lot of wicks. So if you ignore those wicks, you're going to be ignoring a lot of data. Let me see if I can find an example to show you. So let's see. So for example, like if this was your bottom and you took just the bodies and not the wicks, you're ignoring a lot of data. That's 4 wicks you're ignoring. So even though wicks are usually exaggerated moves, that's a lot of data you're ignoring. Another example, let's see another. So another accumulation here. Look at how many wicks you'd be ignoring. You're ignoring a lot of data. Same thing here. Those aren't very long, but you're still ignoring some data. You can do both with this. It's the same technique. You can use candles, you can use wicks. The problem is, think about it this way. The problem is, if I took something, let me see. If I took something like this, let's say this becomes my low, this becomes my high. Or, oh, sorry, we're using bodies now. So now that we're using bodies, this becomes my low, this becomes my high. If you're looking to buy the breakout of this, and you were FOMOing, you weren't waiting for the candle to close, this would have got you, most likely. Or if it did something like this and came right back down, that would get you. You see what I'm saying? If you're using just the bodies, you're making your box smaller, therefore giving it more opportunities to trap you. Because what if this wick is respected? What if this wick is respected as the high? And you're taking a trade on a candle close right here. Let's say it shoots up and the candle closes right there. You closed outside your accumulation high. That would be a buy signal, right? But we closed below the accumulation high if you're using the wicks. You see what I'm saying? So what are you going to do in that? What are you going to do at that point? You could easily be trapped if that wick is respected. If that wick is respected and you bought here, it's going back down to retest the lows, and you just lost that trade. If the wicks are not respected and you took a long when it broke this body, then yes, your entry is better. So you just have to see what you're trading. So for the most part, Bitcoin, I was going to say it doesn't respect its wicks, but it kind of has been respecting its wicks lately. You really have to see what you're trading. Does it respect the wicks or does it respect the bodies? And I've said this about everything. Almost everything I've taught you guys, I've always said, you just have to look at the chart. Is it respecting the wicks or is it respecting the bodies? Whichever one it's respecting, that's what you want to use. You should do that in everything. But this is actually a good example I can use for the future. You guys can also draw this on your charts and see if it plays out. Sorry about my voice, guys. I know I sound ridiculous. I'm all stuffed up. Fucking sinuses are killing me. But you guys can draw this box here because this is exactly what I'm teaching. You have the impulse move down. You have your up fractal. That's your accumulation low. You have your down fractal. That is your accumulation high. Let's take a look at the volume. We have not very good volume on that fractal, but it starts to come in when it breaks out here. So we see some good volume come in on this breakout of the fractal. We see low volume on the high fractal. That's good. You have a little bit of high volume here, but now we're teetering off. Now we're retesting, or it looks like we're trying to go towards the low of this accumulation to retest. So once again, exactly what I just said about the distribution. You can do the same thing here. Take your 50%. Fuck. Take your 50% of the box. And like I said with the distribution, why would you want to buy the highs? What do they always say in trading? Buy the lows, sell the highs. Buy the lows, sell the highs. It sounds simple, but everybody fails at it. Buy the lows, sell the highs. So if this is your highs, why are you buying here? If this is your accumulation, we're not seeing a breakout, why are you buying the highs? Unless you're scalping, obviously. So don't get me wrong. If you're buying, I'm talking about on the daily time frame. The daily time frame, this is considered your highs. This is considered your lows. Why are you buying the highs? Do you like losing money? Like that if you're buying the highs in this clear accumulation, then you like losing money. Look at this. The second it gets below this 50%, buy the lows. Anybody who scalped that and bought the lows, look at this, wick. You can go down to, let's go down to a smaller time frame. You can look at this. That's probably too small. Let me go to like an hourly. There we go. But look at this. If you were buying the lows, where's the high? Okay, the high's a little off here. Let me fix this. Let me fix this box for the lower time frame. If you were buying the lows here, look at this. So don't look at anything before this. So this wouldn't count because this is when the high is made. Perfect test. Buying the lows, buying the lows, buying the lows, buying the lows. Now, yes, if this would have continued lower, you would have lost. But that's trading. It's probability, right? You're trading probability. You're trading the probability of these lows holding. I'm only showing you this to make a point that you don't want to be buying the highs. Like, yes, if you bought the highs here, you would have made money. That's a scalp. If we're looking at this on a daily time frame and you're buying the highs, you're losing. There's almost no point in this where you would have bought the highs, you would have made money. The same thing here. Why are you buying this? If you're not scalping this, if you're looking at a daily setup and you're buying this, I can't help you. That is not a good trade. That is not a high probability trade. You're basically just flipping a coin. You have extremely low volume, showing you that there's low participants. Just like I told you earlier, would you rather have a 10-person survey or a 100-person survey or a 10,000-person survey? Right now, you're looking at a 10-person survey. 5 of them are long, 5 of them are short. Literally a coin flip. Does that make sense? Do you guys understand what I'm saying? I have a question that's not necessarily related to the topic. This is a screenshot of a time frame in question. Is there an efficient way to predict such movements? Let me take a look. Is there a particular way to predict such movements? Are you talking about this impulse move? How you would have predicted that impulse move? This is actually perfect. This is a great example. I can use this as this topic, if that's what you're referring to. This is actually really good. When is this? What 20th is this? This says 20. Oh, you're talking about the one in the middle. Surge up, this one. Yeah, I could talk about this. What day is this? This started the bullish rally. So this is here, down here. I'm going to assume the answer is yes. Let me pull it up. So you're looking at a 30-minute. Okay, where is that? That's all the way down here. Okay. Yeah, this is exactly what I'm talking about. So We're not going to look at this on a 30-minute because this is too long. Let's pull it up on a higher time frame. We're going to look at it on a 4-hour. So you missed the beginning of the stream, but I think I used this exact example. Pretty sure I did. But I'll do it again because there's a lot more people in here now. So we have impulse move down. This is where you start to look for your accumulation. You have an up fractal. Here's the low right here. This is where the up fractal begins to fail. It pushes up, fails, starts to push down. That becomes your accumulation high. Okay. I'm not going to do this exactly, but if you want to throw a 50 point in there, let's just say it's like right there. Okay. So here's your accumulation low. Here's your accumulation high. Starts to push down towards the accumulation low. Gets a little bit of buying. No volume though. No volume. Look at the volume. What is that telling you? That's telling you that nobody's buying the lows. People are not buying the support here. This is your support. This is your second test of your support. And this is actually a good example of what you were saying earlier, to use the bodies. So let me do that as well. I'll show you. So if you're using the bodies here, that would be your low, that would be your high. Okay. So we see the start of the accumulation here. We see the start of the failure here. This validates the accumulation. Then we see the second test of the accumulation low. Or excuse me, this would be the first test. Or that would be the second test. This is the first test. Accumulation low, but look at the volume. The volume tells you have to have high volume when it's testing the lows. You have to. Because if people are not buying the lows, they are going to sell the highs, and they are going to sell the next test of the lows and start to panic sell. If people are not buying the lows, look at the volume. People are not buying the lows. They are going to sell the highs, or they are going to sell the next test of the lows, and it's going to become a panic sell-off. Okay, so that would have predicted the failure here. I'm doing all this to show you how you would have predicted the move up. Same exact thing we just did, but it actually works this time. Let me show you. Same exact thing we just did. It just works this time. Here's your low. Put in here. There's your high. Put in there. High there. Low here. This is your impulse move. Impulse move. Accumulation. Up fractal. Down fractal. Attempt to retest the lows. Failure to retest the lows. That shows you the buyers are strong. Where you would have bought is the break of the accumulation high on high volume. So this is where the accumulation starts. This is where it's validated. You would have either bought a retest of the lows on high volume, or you buy a break of the highs on high volume. Spike in volume. Small spike in volume on the fractal. So this tells you that according to relative volume, there were higher than average people participating in that low. This tells you, according to relative volume, there is a much higher amount of people participating in the breakout than the average. Does that make sense? So long story short, you would have bought there. This would have signaled you to keep an eye on the breakout. This would have signaled you to keep an eye on the lows. No low was touched. Breakout was made. That is accumulation. Same exact thing, just inverse. Just inverse. Try refreshing because you should have like a delay of like less than 5 seconds. Same exact thing for highs though. But it's inverse, obviously. So you're looking for high, low. You're looking for either a retest of the highs or a break of the lows. There's your high, there's your low, there's your retest, failure on high volume, breakout, had low volume. So we saw a small breakout here, but not a very strong one because look at the volume. Nobody's participating. Nobody cares. The breakout actually occurred up here. That's where that impulse move started. So if you shorted the high, you would have made that move. If you shorted the lows, you would have made a small move. But now we're looking at more of a daily setup. We're looking at this here. Actually more of like a... This one's hard here because this one is more of like a 12-hour distribution. But if we look at it on a weekly, it's a weekly accumulation.